Let's look at the risks and rewards of leveraged shares. This is 2 times Microsoft. In theory, Microsoft goes up 1%, you make 2%. Microsoft drops 1%, you lose 1%. It doesn't actually work like that because the nature of volatility is such that if it keeps going up and down, even though the underlying stock starts at 100, ends at 100, you'll be down maybe 2 or 3% more. There's another issue here. Yes, it looks wonderful to go from, about $20 to $150 in Microsoft in 3 years. What the heck? You've made a significant return on your capital. However, the reason most people mess this up is, first of all, they don't know it exists. Secondly, look at this period here, okay, where it's gone from around 80 to 40. So you've lost half your money. You've lost half your money. Okay, yes, you can put this in a SIP and ISA if you're in the UK, and there's equivalents for the United States. And most people don't realize they can get the benefits of leverage within a SIP or ISA, but leverage should not be confused for genius because most people will not be able to tolerate that fall. Okay, if you liken investing in shares to investing in property, the reason in property you hold on is because it's not liquid and nobody's telling you the price every day. When something's liquid, i.e. you can exit it and you're being told the price every day, you're more likely to get the heck out of there, right? So that's a ride most people aren't willing to take. You might think you are, you're not. This is where it's been hovering around the 80 mark for nearly nigh on a year. Okay, pretty much best part of a year. Or you go up, you go down, you go up and down. For me, I've been holding Microsoft, the underlying stock and the leverage for a prolonged period of time because it's the kind of stock where if the underlying drops 20% and therefore the leverage would drop 40% at least, then I'm probably, for my investment appetite, going to buy more. Nature of the company being such that it would make sense for me. So I can hold through a 20-day volatile move or a 60-day or a 3-month volatile move because I'm looking at a 12-month outlook, but that's suitable to me. For the vast majority of people, they should looking at the underlying stock rather than the leverage. So I've given you the warnings of leverage, and leverage doesn't necessarily give you a better risk-adjusted return. It just doesn't, okay? What leverage does is it takes you to improves your return and your risk increases as well. So don't, as I said, mistake leverage for genius. Okay, hopefully that helps telling you some of the risks of leveraged stocks.